Hello and welcome to Smart Finance Investor. Today, we're diving into a topic that's on the minds of many aspiring investors: fixed deposits versus stock market investments. These are two popular ways to grow your money, but they're vastly different. Section 1. Fixed deposits, the safe bet. In this section, we will delve into the world of fixed deposits, a financial instrument widely recognized as the safe bet in the investment landscape. Fixed deposits are essentially a financial arrangement where an individual deposits a lump sum of money with a bank or financial institution for a predetermined period. During this tenure, the investor effectively lends their funds to the institution, and in return, they receive a fixed rate of interest on their principal amount. This interest rate remains constant throughout the deposit's term, providing a predictable source of returns. Primary attraction of FDs is the level of safety and security they offer. In many countries, including India, FDs are often backed by government insurance or guarantee schemes, ensuring that the invested amount is protected up to a specific limit. This government-backed guarantee provides a robust safety net, reassuring investors that even in rare instances of a bank's failure, their principal sum remains secure. Predictability of returns is another compelling feature of FDs. Since interest rate is fixed at the time of deposit, investors have full clarity regarding their earnings over investment period. This predictability is highly appealing to those who rely on their investments for regular income, or individuals who prefer a low-risk, stable avenue for growing their savings. Moreover, fixed deposits offer a high degree of liquidity, allowing investors to withdraw their funds prematurely if necessary. However, it's crucial to note that such premature withdrawals often come with penalties, and may entail a reduction in the interest rate earned. This feature provides investors with flexibility in accessing their funds for unforeseen financial needs, while still enjoying the relative safety of FDs. While fixed deposits provide a secure and steady stream of returns, it's essential to consider their taxation implications. The interest earned on FDs is typically subject to taxation, and the tax treatment can vary depending on your country's tax laws. In many cases, this interest income is added to your overall taxable income, and taxed at the applicable tax rate. For individuals in higher tax brackets, this taxation can significantly reduce the after-tax returns on FDs, making it important to assess the net gains from this investment avenue. Additionally, investors must take into account the potential impact of inflation on their FD returns. In many instances, the interest rates offered on FDs may not keep pace with the rate of inflation, meaning that while the investment remains safe, its real purchasing power could diminish over time. Section 2. Stock market investments, the growth engine. In this section, we delve into the realm of stock market investments, often regarded as the growth engine of investment portfolios. Investing in stocks involves purchasing ownership shares in publicly traded companies. The standout feature of stocks is their substantial growth potential. Historically, stocks have consistently outperformed many other asset classes over the long term, making them a compelling choice for investors aiming for significant wealth accumulation. However, this potential for growth comes hand in hand with higher risk. Stock prices can be highly volatile, subject to market sentiment, economic factors, and company performance, leading to fluctuating values and potential losses. To mitigate this risk, diversification plays a crucial role. By spreading investments across a variety of different stocks, investors can lower their exposure to individual stock fluctuations and reduce overall portfolio risk. It's vital to recognize that while stocks offer the promise of impressive capital appreciation, they come with complexities. Understanding the intricacies of stock market taxation is essential, as gains from stock investments may be subject to capital gains tax, affecting overall returns. Additionally, successful stock market investing requires adopting a patient, long-term perspective. It's not about quick gains but about allowing investments to grow over time. Investors who adhere to this approach often benefit from compounding, which can significantly amplify returns in the long run. Section 3. What's right for you? In this section, we address the critical question of which investment option, fixed deposits, FDs, or stock market investments, might be the right choice for individual investors. The decision largely hinges on one's unique financial goals, risk tolerance, and investment timeline. For those prioritizing safety, stability, and predictable returns, FDs may be the preferred option, offering a secure avenue for preserving capital. On the other hand, investors seeking higher returns and willing to navigate market volatility may opt for the stock market. Diversification also plays a pivotal role, as combining both FDs and stocks in a portfolio can provide a balanced approach, catering to short-term liquidity needs while allowing for long-term wealth accumulation. Seeking professional financial advice is advisable, as certified financial advisors can help tailor an investment strategy to align with individual circumstances and goals. Ultimately, the choice between FDs and stocks boils down to a personalized approach, reflecting one's financial objectives, risk tolerance, and balance between safety and growth potential. Fixed deposits and stock market investments each have their pros and cons. It's about aligning your choice with your financial goals and risk tolerance. If you found this video helpful, please give it a thumbs up, subscribe to our channel and ring the notification bell. Remember, the key is to make informed decisions that work for you and your financial future. Thanks for joining us today at Smart Finance Investor, and we'll catch you in the next video. Happy investing!